In this video, traders, we're going to look at a recent trade I did, a momentum setup on a US tech stock. Let's look at the setup, the entry, the exit, and what I could have done better. Stay tuned. Hey guys, warm welcome to you. All right, so I'm gonna hit the screens in a moment and talk about a momentum trade I took on a US stock called DataDog. I'm going to look through or talk through the process of finding the trade, the process of entering the trade, the process of when my exit was, where I actually eventually got stopped out of the trade in a profit, and maybe how I could have played it a little bit better. Let's hit the screens. All right, guys, so here is DataDog. Now, DataDog is, it doesn't really matter what it does, to be honest with you. The point of the focus is that it's a strong stock. Okay, now why is it a strong stock? Have I identified it as a strong stock? I've identified it as a strong stock because it's recent IPO'd back over here, sat in a channel. We had earnings come out here, which has broken it out of a multi-month channel. As you can see, pop out that high side with momentum, and we have a gap to the upside. So there's a lot of boxes ticked, in my opinion, that this thing is actually a very strong stock. Okay, so if it's a strong stock, I want to be long. I want to get long. I want to continue thinking on the long side. And I'm always looking for stocks that are either strong or weak, persistently so. So this persistence of driving up and with a catalyst is ticking lots of boxes for me. The breakout, the technical perspective breakout, the runaway gap, the earnings catalysts, the fact that it's gone some lows, off the coronavirus lows back here to 29 bucks. They're all ticking boxes to me that, hey, I want to find an entry to get long on this stock. Now, forget about these past 1, 2, 3, 4, 5 bars. In actual fact, I'm stalking it for an additional entry. But the trade that I took after this drive up and the first pullback here, in hindsight, the better trade was definitely the first time it does a pullback and pushes back up. However, I'm looking at the scenario now. I'm just going to drag it over here and we can see, and actually, you know what, I'll bring it into the full screen so we can see. So this is what I was looking at the time. Okay, the gap up and a little, basically a little bull flag scenario, right? You've got a good move higher and you've got an almost a pennant, really, bull flag slash pennant forming up here. A little triangle on the top of a flagpole, which I just like, because that's just showing that we've got pent up aggression, we've got an uptrend here, we've got a kind of cap on it here at 72 bucks. It's a nice position to be in. Now, what you don't want to do, what I don't want to do, is just stab at it long without some form of trigger. I need something to get in. I've done my due diligence. I've decided this is a strong stock. I've decided the market's reasonably strong as well. I've decided I've got a lot of reasons to get long on it. However, as I've said in many of the videos, guys, before, and it's something that I just focus on really, really, really a lot, is to try to find an entry where I have a quantified place to put my stop. I do not know if this trade is going to work or not. I do not know if I'm going to get stopped out. I don't know anything. But what I do know is if I can have my stop at a sensible level and I can play that game, I know I can create a risk-reward ratio that's good. I can create a trade idea that's also good. It's got a high probability of success. I talk a lot about probability of success and the risk reward ratio and trying to push both of those up as much as we can. So this is almost a momentum ignition trade, getting those two parameters as high as we can, and if we can take a lot of those, it's going to pay off over the long term. So let's go back to the trade idea. Strong stock, looking to get long. Okay, now I see that we're pushing up. We didn't quite break out of this 72. And I'm always a little bit concerned about buying breakouts. I'd rather have a trigger and start buying on red. Talked about buying on red many times before. Okay, so I need some kind of trigger. Now for me, I quite like seeing a low breached and then push back up through that low, which is exactly what happened in this. I'll drag it back in now because we know exactly what we're talking about. This is exactly what happened in this area here. Let me put a circle around it. This area here happened to be my trigger. Now, why was that my trigger? So we've had the good drive. We haven't really encroached back into the gap. We've had a little wick here, so strength. We're seeing evidence of strength. The gap, the earnings, the pullback, wicks to the downside, holding at highs, holding at highs, holding at highs, little doji. Okay, the next day we break through this low, which happens to be 69.26, and we went to a low of 68.45. Then when we come back up through the low, now I've got my trigger. Because you think about what's actually happened here, we've pushed to a low, the next day we've opened up and we've done this, and we're starting to come back up again. Now I can initiate a trade, I can quantify my risk. You know, I can say to myself, okay, as we come back up through this low here, this 69.26 low, I can buy the stock, and of course I'm going to get a little bit of slippage. I'm not going to be able to get a 69.26. There's some spread on this stock, so by the time I got in, I think I got in at 69.50, something like that. The stop can be below the current day's low. So I can have a $1 stop, let's just less than $1. In fact, I think it was slightly more than $1 when all said and done. So I'm not going to be right at that low, I'm going to have a bit below. So $1 risk. Okay, and you might think, well, that seems crazy because the stock is a $70 stock. You know, that seems so low. But if you're basing it on a technical move, then you can get away with it. And that's what we're trying to structure. We're trying to say, okay, listen, the chance of this going higher is good, but I just need to get a technical trade. I need to find a technical entry, and that is a perfect technical entry. So $1 worth of risk, and I know that I'm going to expect to see a breakout of the high. And the high here was 72.15. So already, you know, by the time we're into the trade, 69.50, you know, we've got a decent risk reward ratio. We're looking at 3-to-1 risk reward ratio. We're looking from 69.50, 70.50, 71.50, 72.50. We know approximately that's going to be our, you know, at least a primary target for the deal. So risk reward ratio is good, probability of success is good, things are ticking the boxes, and I'm just, you know, I've been stalking this, waiting for something to do that. I can't get in here, I can't get in here. Okay, finally, and it might have gone without me. If it went without me, I'd have probably gone, oh, disappointed I didn't get on it earlier in this little play here. This seems better, but sometimes these do fill the gap. But anyway, still, it was a perfectly valid trade. But nevertheless, into the trade here on that trigger with a $1 risk. Take these all day, every day. Now, we look for 2 or 3 day momentum. Oh, I look for 2 or 3 day momentum and look for a possibility of trimming into a 3rd day of momentum. Didn't quite get it on this one. However, I will always, if we gap up, I will always have a stop under the gap level. So which is exactly what we did, and eventually it stopped me out, and it's stopping me out around this 73.50 level. So yeah, nice trade, good profit. Shame I didn't get a good run on up to $80, which would have been a very nice risk reward ratio trade, which is quite feasible. You know, when you look at the structure of this trade, guys, you look at the picture, you know, a drive up to 80 wouldn't be unfeasible. In fact, it's very, very probable. But in actual fact, it gave me a good run on the 2nd day. 1st day was okay, fine, closed all right. Good run on the 2nd day, broke out, held the breakout, closed above the breakout. It looked really, really right for a 2nd day drive. We gapped up, looked perfect, but you've got to be careful. You know, you've got to be very careful. I'm always going to be dragging my stop up, especially when we get a 2nd day gap up. If the momentum is there and it's continuing, the gap up is going to gap and then it's going to continue. You're not going to get a retracement back. And you've also, one more thing, if you get the gap up and go, the momentum is on. You've got the 1st day, 2nd day, good solid breakout, $80, fine, whatever, I trim and trailed as we went along. However, you've got to be mindful, this has come a long way very quickly. Momentum can continue, but when it wants to pull back, it can pull back brutally. Now, I'm not going to give it much room. If it's a momentum trade, momentum play based on the trigger, based on the break with things I want, I'm not going to be giving it oodles and oodles of room, because this thing could pull back all the way down to 56 and still be a buy. It'll still be a buy when it just about filled that gap. In fact, I got an alert on there to say, hey, if it starts to pull back to there, great, let's take the trade. So, actual fact, it stopped me out as we gapped up through the high there. I'll put it on a 15 minutes chart so we can see what's going on as well, guys. You know, it stopped out. Let's get the extended hours out and let's clear out some of this stuff. You know, as it started to gap up and it came back down, it gapped up very, very quickly, started to fill that gap, and so I'm out of the trade. You know, in reality, you know, you want it to continue. If it doesn't continue, you know, it was a very nice kind of 1st day push and held at the highs, great, gapped up, looking for a continuation, doesn't do it, you take the trade out. Now, is it a bad trade? No, you know, it's a good risk reward ratio trade. It's still got a few bucks per share in the pot, but it's one of those that I like these, and these I'm going to do another one as well coming up soon, guys. A couple more I'll review for you. So even though technically it was a trailing stop hit, it was a profit, didn't quite get the full juice on the trade, but it's one of those that, you know, even if it doesn't work out, what's the worst case scenario for me? $1 risk. I can take that all day, every day. And this didn't quite get momentum. Still got out with a profit, fine. And I think that's the name of the game when you're playing these type of trades. You know, if you can find I really do think that if you can find, regardless of the pattern, regardless of whether you're trading the flag, whether you're trading the break of the flag, whether you're trading a double bottom, whatever, regardless of what the overall bigger picture is, if you can find a place where you can really minimize that risk reward ratio whilst it being sensible. There's no point saying I want a really tight stop and it not having a sense to it, but having a stop under the prior low after it's gone back through, it's like, okay, well, we've seen lots of things stacking up in our favor. Let's see if we can get some momentum and some drive forward. So anyway, guys, that was DataDog for you. That was a momentum type play. Some idea of what I was looking for, the entry on that, the ultimate exit on a trailing stop, and it's not perfect because trading is not perfect. This is the real world. This is what happens. But you know, next one, hopefully we'll have one soon. I'll do a review and I'll show you that a good, nice momentum play. But if it doesn't, you know, we'll show you some ones that got stopped out as well, and just kind of go through the process a little bit moving forward. So make sure you are subscribed if you like this kind of stuff, and hopefully it helps you guys out. Definitely helps me out talking through the bits and pieces as well. Helps me kind of solidify some of the stuff I've got in my journal, and if you guys can take a few things away from it, then perfect too. Take care, guys. See you next one. Bye bye.